Hello everybody, it's Jason from Investing Logically. Hope you guys have a wonderful day today. In this video we're talking about some stocks that you should consider buying the dip on. I do think these stocks could double in the long term, give it 12 months or so. Been recently shorted, and we're going to talk about how ARK Invest is loading up in the ETFs. So let's go through this. So the first stock on the list is called PTON Interactive. Ticker symbol PTON. They're trading around nearly $120, so they're down from the all-time highs more than 30%. They have things like treadmills, bikes. They also have subscriptions which you can use as some exercise classes. They have a big screen on their treadmills. I do think this is useful because it really motivates you to do your exercise. They also have accessories such as dumbbells, earbuds and heart rate monitors, and they have many more. So basically this is the opposite of gyms. So instead of going to the gym, you can just use the equipment or purchase the equipment and exercise at home. I think this is useful because if you don't have time to go to gym, you can just order their products and you can exercise at home. So that's really good. I do see many YouTubers using Peloton and other models instead of going to the gym. So basically what this means is that they're actually making money. So today they're up 1.78%. They're just down 0.3 on the after hours. But let's look at the year. On the year, they're still up 230%. So that is really good. So the reason people think it's going to go down is because people are just going to go to gyms. They're not going to buy the products anymore. So I do think Peloton in the future. I do think people would much rather work out at home than go to the gym. It is much more convenient. You don't need to drive to the gym. Some people live quite far away from the gyms, which makes it harder for them to work out, and Peloton would be a solution to that. Basically, Peloton helps with the consistency of workouts. We know when COVID happened, gyms were closed. Basically, Peloton helps with the consistency of workouts when pandemics like COVID-19 happened. We also know the importance of physical well-being is right up there. I'm going to do a really different comparison. I'm just going to compare their 2020 revenue to the top gyms in the United States. So we can see Peloton 2020, they had roughly 1.8 billion in revenue. One of the top gyms called LA Fitness, they had revenue of 2.15 billion. So they're a bit more than Peloton. I do think once their business expands, they're bound to reach that revenue thresholds of the top gyms. In just one quarter, they reached 1 billion in total revenue. I do think they're going to reach that threshold really soon, maybe end of 2021. So we'll see. I know this is a kind of weird comparison, but I'm just going to put that out there. We see ARK Invest buying more. We look at on Monday they bought another 77,000 shares. So Cathie Woods is really bullish on this company. So let's see what some big institutions are doing with the stock. So today, tons of institutions were buying onto the stock. We have this institution who bought 300 shares. We have Symphony Financial, they bought another 2,000 shares. We have this Wolf Wheeze Magna bought 20 shares. DNB bought another 31k shares. That just shows what some institutions are doing. Some are bullish, some are bearish. When we scroll down, we have some bears. They're in the red because they think the stock's going to go down, so they sold out. So basically, if you believe in the company, you believe in their future, you believe in their fundamentals, then invest for what they are. So not based on what these analysts are, not based on what these institutions are doing. Let's look what some analysts are doing. So based on 25 analysts, they have had price target of 162 and 52 cents. It's a 35.55% upside. So that's really good. So they have a high of 200, but then they have a low of 45. That is super low. I do not know why is that number. Some people think it's going to go down because once gym reopens, they will not make any more money. But there's some bulls that think this is the future, and no matter if gyms open, they'll still make money. I don't think you should pay attention to these analysts. They have mixed views. Some bullish, some are bearish. So basically, if you believe in the company and you believe in the fundamentals and you believe in the future, then invest for what they are, not what these analysts are saying. We're going to play this one. So for this one, I'm going to average down on 4 different days on 4 different strike prices. So let's say $1,000. So Monday, I put my first 250, no matter the price, because we believe it's long term. Then on Tuesday, if this drops to 114, I put my next 250 on this. The next day, it drops to 110. I put my next 250 on this. On Thursday, it drops all the way to $100. I put my last 250 on this. So it might not drop the low, we're gonna have cash on hand to put a dip. We never know when this is gonna dip, so we're always gonna have cash on hand. So I'm really bullish. I do think this could reach at least 160 this year or by next year. Stock on the list is IDEX, ticker symbol IDEX. So this is a penny stock. So basically what they do is that they facilitate the adoption of commercial EVs. So we have some news. So Tree Technologies deal to supplies 200 electrical motorcycles to Indonesia. So this partnership is with IDEX, so that's really good. So in 2021 alone, they see to deliver a total minimum of 10,000 units. These motorcycles will have an average speed of 65 to 90 kilometers per hour and travel range of 85 to 120 kilometers. So that is really good for just motorbikes. So basically this is really good news. Let's see what IDEX is going to do in the future. So we're now going to look at what one analyst is thinking of the stock. So based on one analyst, they have an average price of $7. That is really good. That's a nearly 200% upside from its current price. In the future, you believe in the fundamentals, you believe in their technology, what they're trying to do, they invest what they are, not based on these analysts. So now we're going to talk about how you should invest in this stock. So for this one, we're going to average down on 4 different strike prices. Make sure you have a stop loss because this is a penny stock. So let's say Monday this drops to $2.30 for my first 250. Then Tuesday this drops to $2.25. Then Wednesday this drops to $2.12 for my next 250 on this. Then the last day this drops below $2 for my last 250 on this. So make sure you have your 10% stop loss because it's a penny stock. It could go down 40%. And also when you're up 40 to 100%, put your 7% stop loss to protect your profits. So that's what I do. So we'll get a bonus on the list. There's like some more DIS. So in 2020 in March they dropped, I think it was nearly 40%. Then they went back up even though the parks were closed. One of the source of their revenue is from their streaming services where people can watch shows from Disney. So that is really good. They're like a massive competitor to Netflix. So Disney California parks reopen April 30. This is good news because back in 2020 they were in lockdown and couldn't go to Disney World. So now they have the chance when the parks in California reopen. So I do think this is good news because more people will come, which means more money being made for Disney. So for this one, I would average down. I would buy how much I can afford. Let's say $1,000 on Monday. I put my whole $1,000 no matter the price. Yeah, it doesn't matter. This is basically a long-term hold and really safe in my own opinion. So those are just basically some stocks you should buy the dip on. Not financial advice, by the way. That's it from me. Hope you guys have a wonderful day today. See you guys next one and happy investing.